Hey guys. I got Chris with me. I think all of you guys know Chris is my business partner. We've worked together for what, 12 years?
Yeah, we met in 2009 or 2010,
Pretty
thereabouts.
crazy. Feel
Yeah,
very old.
I
Um,
know.
yeah, I think we'll just open it up to whoever wants to ask a question. Monica, do you want to just kind of we can't really see that well because we're using the monitor. So Monica, if you just want to tell say who should go next or whatever.
Sure. I before you guys came in, we just told everybody just to raise your hand if you have a question, and then yeah. So there's the raising the hand motion is under reactions at the bottom of the screen, and you can just click on there. I'll just show you guys like this. It's like there's a little button. So if anybody wants to go, it's usually like the first person.
Yeah, everyone's always scared to go, and then all of a sudden we get a bunch of hands.
I can't hear you, Julian.
Okay, Stephen, can I go ahead?
Hey
Hey, Steven,
guys,
how you doing?
good. How are you?
Good to see you. We'll see you at our AGM, I think.
Hopefully, but I think you guys are going to be at Capital Camp next week, so I'll
We
see you
will.
there.
Yeah, we'll see you
Oh,
there.
cool. Yeah.
Awesome. Yeah, I would love to schedule a time. But Chris, curious, like outside of the obvious companies like Constellation and Berkshire, what are some companies that you like to follow or draw inspiration from?
A lot of them are kind of like older companies. Like I draw a lot of inspiration from Teledyne. I'm a huge fan of Kurt Kerkorian, for example. I love like Kurt Kerkorian was like this deeply under the radar Armenian investor and capital allocator. And he would find just incredible value off the balance sheet and just kind of go above and beyond. Same with Peter Cundall. I had a huge amount of respect for Peter Cundall. A lot of people just think of him as this net investor, but he was also a bit of an investor as Andrew and I are, where he'd go out and meet and build like a real sense of trust. And he'd come back and talk to his team and say, you know, I got drunk with these guys. I met their daughter. I think we could trust them, and we often operate with a high degree of trust. And I look at people like that and think I draw a lot of inspiration from them.
Yeah, that's great. And then as just a quick follow-up, are there like on that theme of trust, are there some favorite questions you like to ask to try to get to that level, or is it just more spending time with people?
Yeah, I think it's just spending time, right? I think a lot of people will listen with the intent to reply as opposed to just listening to understand. And so often when we're just meeting someone who might be a potential partner, we're just listening really to try and understand and just trying to like probe a bit further. I met someone recently and he started off with a bit of a high bravado. And then I told him this story about like how I got into investing, just desperately trying to impress my dad. And he kind of like broke his barrier down, and he just told a very similar story of how he'd like felt like he'd lost his dad all this money and was desperately trying to win it back. And I find that like understanding those human aspects to people just goes so much further than any kind of real token question you can
Well,
do.
and if they don't have the human aspects, that's when you got to be worried.
Yeah, 100%.
Yeah.
Yeah. If they're not nervous or excited or don't have humanity to them, you got to run. If they're too shiny.
Yeah, we always say when we interview someone, a big red flag for us is if they don't have sweat stains.
Yeah.
You should be nervous when you're interviewing with someone, and it's nice to see some vulnerability in their soft underbelly.
Yeah.
Bawan, can you go next?
Yeah. Hi, can you hear me?
Yeah.
Yes.
Yeah. Hey, Andrew and Chris, hope you're doing well. This is a question regarding the news on Twitter earlier about Shepherd, the merger stake buyout, valuing the company at 52 million, which is pretty shocking. And in this Twitter bubble we live in right now, it seems like everyone is building like recruiting agencies. But do you guys still think there's like an opportunity to build something like that? And maybe if you do, should you go like hyper vertical and like one specific hire, or should you be more broad like Shepherd is?
Well, I'd say never trust the crowd when it comes to thinking that everything is over. So, for example, we bought a business called We Work Remotely almost 10 years ago. And at the time, everybody was saying job boards are dead. Craigslist is killing them all. Crop, there's all these big aggregators and stuff. and we made a fortune on that business over the last 10 years. So I think it's not to say that you should invest in newspapers or something. You want to invest in things that have not been disrupted, ideally, but sometimes there can be some really great opportunity when the pack has looked away. As for Shepherd, I think that one is in our too hard pile. We did look at that deal, and I actually spent a lot of time with Nick Huber talking about it, because we were at an event together when he was bidding on it. And for us, it's just a bit hard to predict. I don't know if you guys saw the OpenAI announcement yesterday, but it was really the advent to me of digital people. And I think somebody said it really well. I forget who it was, but they said, imagine if we discovered a new continent with 1 billion people on it who are all willing to work for 1 cent an hour. That's like AI. Yeah. And so I just wonder how much of the work that is being outsourced right now will ultimately be eaten by AI. Now, that doesn't mean that there won't be a ton of outsourcing still. It's just hard to predict. So we ultimately, we're not participating in that world. It doesn't mean that we wouldn't ever buy a business in that space or start one. We just, for that particular deal, it didn't make sense for us, but it's a phenomenal business. And Marshall used to work for us. We really like Nick Huber, so we wish them the best.
Thank you.
Nick, you're next. And you're muted.
Yeah. Hi, everyone. This is Nick. I just...
you're muted.
Yeah. Sorry. I'm Nick. I'm from Italy. I just entered in this community. I actually have 2 questions. I remember that in one of your podcast with My First Million, you mentioned that at the beginning of Tiny, you read all the books that you could about value investing and Warren Buffett and Charlie Munger and so on. And I was wondering, I don't want you to mention them now or to list them now, but if there's a way to give us a comprehensive list, that would be great. And that was not a question, but it just
interestingly. So I've got a book coming out in July, and we're doing we're doing a deal where if you buy the book and you send us your receipt, we'll send you a bunch of like bonus stuff. And one of them is a big extensive list of a lot of our favorite books. Is there anything offhand? What have you read lately that you've really liked?
I just read John Harrison's book all about the chronometer, but I wouldn't say that's really as applicable right now. I have a book list, by the way. I can easily share it with you.
Yeah,
I actually have one that I send to people when they ask.
Awesome.
Yeah, maybe email me or email Monica, and then she can connect you with Chris, and Chris will send you a book list. And anyone else who wants to get that, we're happy to share. I mean, it's so interesting. Like Charlie Munger, what did he say? He's like, all of life's wealth can come from a $1 book from a used bookstore, right? And I think it's all there. All the cheat codes to life are all sitting right there.
Yeah.
There's a lot of good ones. Chris just mentioned one of my favorites, The Gambler by Kirk, which is about Kirk Kerkorian. Incredible book about investing and just doing the right thing, operating with integrity, different mental models for investing. I mean, phenomenal book.
I would read How to Get Rich by Felix Dennis as well. Highly recommend.
Yes.
Right now I'm reading Business Games, which is really good.
I bought your book
books for hours, by the way. Yeah, like we're huge readers.
Yeah, me too. I bought your book in like and so I got that list that you mentioned, the PDF with the list. But I was wondering if there's anything else. So yeah, I'm gonna email you. And then if I can, the other question was for how long have you been? If I got it correctly, for how long have you been financing the acquisition of startups through Meta Labs profits, and when did you started using other people's money or other investors' money?
Well, yeah, when did we start using Meta Labs profits? Like I almost feel like it was like 2009 till 2013 thereabouts. And I've always thought that this is a bit of a series of lessons. Like one of the early lessons Andrew and I had is let's pretend MetaLab isn't this sexy tech business. Let's pretend it's an analog world business. So let's pretend that it's the world's greatest law firm. And whatever's true for the world's greatest law firm will eventually be true for a business like MetaLab. And it becomes a capital allocation problem, where if the world's greatest law firm makes $10 million tomorrow, what can it spend that money on to meaningfully move the needle? And there's not that much. It's in a very competitive advertising space. there's no real equipment a law firm needs to buy. This is equally true for agencies. I find, maybe the world's greatest law firm could acquire another law firm, but growing via acquihire is pretty hard and dangerous on culture. If you're the world's greatest, you don't need to buy their book of business. You don't really need another law firm's brand. So I find most law firms end up eroding margin by getting increasingly nicer offices or art galleries. And that's true with agencies. If you move the parallel from analog to what we were in as an agency, we know an agency in Toronto that has a basketball court, for example, or had, they're now defunct. And so the lesson early on was we should take the proceeds and start better businesses. And so we did that kind of like from 2009, maybe a bit before you were doing it, to about 2013.
Just incubating.
Yeah, just incubating. And we ran into a couple different problems. One was the squeaky wheel always gets the grease. So a problem client at MetaLab would always be louder. So we'd pull resources that were working on an internal project and pivot them over to, back on client work. And so all the internal projects would continuously suffer. And the other one that kind of jumps out was not knowing how much risk we were taking. We were spending millions of dollars, trying to be kind of like, invest in businesses that you could actually reinvest in. But what would happen is we'd spend millions of dollars building a product, finding a team, trying to find management, trying to explain value proposition to prospective customers and fill the funnel. And then realizing you don't have product market fit, pivoting, refilling the funnel, reinvesting, buying businesses. And what Tiny does now, I look at this as skipping the line, where you already have a product, you already have a team in place, you already have a brand, and you're just buying businesses for multiple of its earnings. So it's just an evolution of lessons. And that's kind of 2014 onward.
And we realized that, if you start 10 businesses, maybe one to three of them will succeed. Maybe one of them will do really well and two will be kind of moderate successes. And so we realized that was just really painful. That was really hard on us. We would start all these companies and really believe in them. And then we would, by nature of creative destruction, we would have to watch them fail. Yeah. And so when we discovered the idea of just buying them, we were like, oh my God, we skip all this pain. And none of them die. Almost every business we've bought, except for a few small exceptions, everything is still going today.
Yeah. Everything's been capital allocation lessons.
So the ones you bought, were they both through with the money from MetaLab, and you still with the money from MetaLab? Okay.
Basically what we did is we took the profits of MetaLab, we used it to bootstrap other businesses. We sold one of those businesses, and in 2013 we were still had a lot of cash flowing companies. We were making $4 or $5 million of profit a year, and then we also had this pile of cash from selling the business. And at that point we said, well, we've really been ignoring it, but we should really learn this boring stocks and traditional investing stuff. And that was when we discovered Buffett.
Yeah.
Okay, cool.
Awesome. Thanks for your question.
If we can go with Rakesh, who had a question earlier, and then we'll go with Christian.
Yeah. Hey, this is Rakesh Agarwal. I run a $7.5 million ARR media tech company, Snapstream, and a $100 million fabricated steel manufacturing company. This is a unique opportunity. You guys are partners. Can you share a little bit about your partnership? What does that?
Are you driving a Tesla
like?
Right now?
I am.
I just heard that little autopilot doo-doo noise.
Yes.
We're going to hear him die. Yeah. He's going to drive into a highway divider. Sorry, just keep going.
Yeah, well, so the question is just would you share a little bit about your partnership? If there's a division of labor, what does that division of labor look like? In what ways do you challenge one another in particular?
Well, it's really interesting because Chris and I are very similar in some ways. We're both naturally wanting to connect with others, and we're both kind of students of psychology. We love relationships and figuring people out and making others happy and all that kind of stuff. So we have some of those core shared kind of methods of operating. But we always like to joke that if Chris owned a building, it would be like derelict and it would be highly profitable. So it'd be like, he'd be a slumlord, basically. Like it would just be maintained enough that no one complains, but it'd be maximized for profitability. And if I owned a building, it would be like a shiny architectural masterpiece, but it wouldn't make any money, right? And, it would be very well thought out, but ultimately I'd be putting everything back into making it more beautiful. And so when you put those two things together, something really magical happens. And, you know, we've both changed over time. I think we've influenced one another. I think if Chris owned a building now, it would actually be a lot nicer because he'd realize being a slumlord is stressful. And I think I'd realize that pouring all your money back into a shiny architectural building sucks. And I would also be more humble. But I think that's kind of where we started. We always like to joke that, you know, at any given time, one of us is the gas and one of us is the brakes. Just today, Chris came in and he was feeling really stressed out about a problem that he's dealing with. And I was able to counterbalance that and say, hey, let's think long term. In a couple of years, that won't be a problem and we're all good. Yeah. And often it's vice versa. I'm coming in panicking about something and Chris is the chill one. Other thoughts?
Well, I think you actually hit everything really well. I'd say there's no very clear delineation of duties, though. We just kind of naturally gravitate to what we just we have our own problem sets that we'll gravitate towards over and over, I find. But there's no real set expectations.
Yeah, we kind of have different relationships with different CEOs and leaders at the company. So like Chris kind of has his own people and I've got my people, and then we have crossover. And what that allows us to do is we'll get attached to somebody, right? So Chris might have a CEO that he has a really good friendship with and he talks to a lot. And when he brings up that person's comp, he's you know, he's got a certain opinion and he's biased. Yeah. And then I'm able to come in and be cold and rational. And that same thing happens back and forth. Yeah. But yeah, it's quite random, I'd say.
Yeah.
Did you guys, is there tension and stress? How do you guys fight? How do you disagree?
Yeah, we fight all the time. The nice thing about our relationship is that we're always able to resolve. So even, you know, most of the time, like, let's say if Chris and I snap each other, we'll probably resolve it within 20 minutes. Occasionally we'll have more festery fights where one of us is resentful because the other one, you know, is like I went through a divorce 2 years ago, and for a few months I'd kind of like disappeared and a lot of shit went to Chris, and like, you know, he got annoyed that I was off disappearing. And, you know, sometimes that same thing happens, or, you know, one of us will take on a problem and the other one will be annoyed about it or whatever. But for the most part, it's kind of like a brother relationship, I'd say, where it's like, we always know we're solid, but we definitely will get annoyed and snippy. And sometimes we'll have to really hash stuff out.
Yeah. I'd say there's a huge amount of trust, though. Like, I really do think of Andrew as a brother, which helps in the regard of, you know, even when we're poking each other, there's still like a high amount of respect that I have. I'd say the one thing that I see the most is we've been together for so long that we'll be quick to think the other one is thinking a certain way. And we'll be quick to be like, oh, you made this face, or, oh, you did this. And it causes the other one to react even quicker. So we almost rise really quickly, but we're both good communicators. And so we'll abate the situation quickly. But no,
which can be funny when we're in a team meeting or something, right? Yeah. Well, like we always joke like, oh, the parents are fighting, you know?
Yeah. Yeah.
Nice. Thank you.
Yeah, you bet.
Christian, can we go with Christian?
Yeah, perfect. First of all, it's honestly nuts that for like $30 a month, we can ask a couple of founders of a public company some questions. So appreciate it. So I just recently exited a company, and I'm just like super interested in holdcos and building a portfolio and things like that. I guess my question would be, if you guys were to like start today trying to buy companies, what industries would you look at? That type of thing, other than like what you're doing at Tiny, because obviously it's like simple SaaS. I guess a different way to ask this question is, you've mentioned before, like barnacles on wells is a good strategy to go with. Are there other wells out there that you would start to look at if you were beginning today?
Well, my immediate thought is just kind of like, you know, what's your circle of competence? Because when we originally started Tiny, Andrew and I had this idea of, hey, we made money in the digital world and we'll go out and buy analog world businesses. And I spent an inordinate amount of time looking at an HVAC company at the start. And it was this great realization of like, hey, where's the actual cash flows of the business? And there's this crazy inventory they had and this crazy amount of equipment that they were constantly purchasing. And I kind of was outside of my depth. And all the while, Andrew was peppering the Dribble founders, saying like, hey, we love your business, you know, any way that we can participate and invest. And that was a business that we understood. We are, you know, he was already a designer. There was an unfair advantage there. We already like knew the quick levers that we could pull. And so if I was to go back over again, I would kind of just like look at what are my immediate circle of competence that I can understand really well. And I would look at that and over time expand. Like we've expanded since, and I now feel really comfortable buying analog world businesses or traditional businesses. But it's taken like all of everything bolts onto each other and builds this depth of experience or builds more scar tissue to learn from. And so I would honestly look at like, hey, what were you doing just recently? What clients were you working with? What suppliers were you working with? What relationships did you have?
What problems do you have?
Yeah, what problems did you have before with your old business? Who are you negotiating with? And I would look at all of those businesses and just try and find the best one, because you probably understand that better than anyone else will. That's my thought. You?
Yeah, I mean, I think just like entrepreneurship, I think the best opportunities are problems you understand, to Chris's point.
Yeah.
And I think, if you think about what are the problems that you've experienced in your last business, how could you solve one of those problems? I think that if you go into HVAC or something you don't understand, I don't know what your last business was, you're the patsy at the poker table. So it's like you don't want to have no clue about the levers to pull. I think that Chris and I, we're pretty accomplished entrepreneurs in 2016. We had a lot of success. We're, grown a big business, and we started a pizza restaurant. And, I'll tell you, man, we lost over $1 million on a crappy little pizza restaurant because we didn't know what the hell we were doing. And we thought we would implement, digital POS, and we'd have great music, and we knew the vibe, and we're designers, and we had all these advantages. But it's pretty easy to get your kidneys harvested when you just don't know how to call bullshit. And so, we've looked at many analog world businesses where they look great on paper, but ultimately, as you dig in, you realize they're just so hard.
Well, and you don't know, it's so easy to outspend, because someone will say, oh, we have to get this refrigerator replaced. And if you don't know, then next thing you know, you're spending like 12 grand, and like these little paper cuts end up just killing actual cash flow generation in these businesses. And so that's why I kind of lean circle of competence is key.
Well, in every entrepreneur, they fetishize the other business, right?
Yeah.
So it's like, if you're in SaaS, you want to be an agency. If you're in digital, you want to be an analog, right? Like I look at friends that have businesses that are in the analog world, and I go, oh, you're so lucky. You don't have to think about AI. You don't have to think about technological disruption. But on the flip side, they have really serious problems and fixed margins, and they can't grow without capital. And they're dealing with all sorts of problems that I don't even understand. So, it's hard.
Yeah.
Yeah, I think my problem a little bit is like I come from direct to consumer. And as you've stated before, e-commerce is kind of like playing business on hard mode. I'm like, I don't really want to do that anymore. It's a grind. But yeah,
but it'll make you frosty, right? Like Chris and I, we operated business on hard mode in an agency. And then when we went into an easier business, we dominated, right? We would just be like, oh my God, we can run this like this like software company that previously operated at 10% net margins. Well, why can't we just operate it at 40% margins? And the reason that they hadn't done it is just because they didn't know how to negotiate. They were overspending on silly things. So I think that skill set is really valuable if you can apply it to a different industry.
Well, plus, like you have an unfair advantage with DTC to look at other brands then, or what software tools were you relying on? What did you think would have been better, right? And I would honestly expand the circle to every single product you interacted with, and just see who owns it, or is there a competitor, or is there a better version, and then just throw it stink.
Even think about AeroPress. So we bought AeroPress. Yeah. They did no D2C. They had no D2C strategy. They didn't have their own website really. Barely. I think it was like 1% of their sales were actually sold direct to consumer. And so we could buy this really exceptional business that had all these great channels in retail and wholesale, but we could just add in the D2C, and it didn't need to be perfectly executed in order for us to do well, right? So you could do something like that too. You could take an analog world product that's already successful and doesn't have a lot of competition, and just add in your D2C stuff.
Thanks, guys. Thanks for your thoughts.
You bet.
Colin, can we, are you ready? And then we'll go back to people who already asked.
Sure. Yeah, so I wanted to learn more about how your partnership works from a logistical perspective. Like, what type of decisions do you make without consulting each other? What decisions do you absolutely need to talk about? How often do you meet with each other? And just kind of how do you manage the partnership on a day-to-day basis?
So we'll go through periods where we don't see each other for 2 weeks, and then we'll have other periods where we're together every single day, or we're traveling or something like that. We are generally texting almost the entire business. All of Tiny is basically run on iMessage. We don't use Slack or any of those tools. Yeah. So we're basically both on text, and then we have a really amazing personal assistants that own our inboxes and basically relay stuff to us. So I don't think either of us do our own email. Do you?
No.
So really we're in constant kind of back and forth communication. Chris and I will both basically go set comp structures for key executives and stuff. Usually we'll run that past one another. Chris will sometimes have a deal that he likes, and he'll kind of run it past me. But sometimes they'll just say like, "Hey, we sent an LOI out. This is happening." If it's smaller, if it's a larger acquisition, we'll bring it to one another, right? But I mean, there's no rules. Like generally, we just operate it as if it's like, completely equal, and at any given time one of us can block the other. And so if Chris feels really strongly about us not hiring a certain person or whatever, we'll either agree to that or we'll disagree and commit. There's people we've hired where me or Chris has been like, I don't like that person, and we've disagreed and commit, and sometimes one of us is right and sometimes that person is wrong. But if we feel really strongly, it's kind of a hard no.
It's hard to qualify almost to say, like, so we often know what to bring to the other person, and it's because one of us is looking for feedback or help, right? And I'd say that's actually the more governing principle than anything, is like, otherwise we're just making our own decisions, but often we're running things past each other just to get a second set of eyes.
Yeah, that makes sense. How do you, so when you disagree on something, how do you, if there's like something you can't reach a compromise on, how do you resolve that?
Well, we fight about it.
Yeah.
Well, I mean,
I got this scar from.
Yeah, I mean, we'll argue about it. We'll kind of get on the whiteboard and start debating it and hash it out usually. And there have been instances where one of us completely disagrees with the choice, but we're pretty good about not blocking unless we think it's a fatal wound. We always joke that we want flesh wounds, not mortal wounds.
Yeah.
And so if we think, if Chris wants to do a crazy acquisition, or I want to do a crazy acquisition, and the other is just completely opposed, that's not going to happen. But if it's like something small that's an experiment, or we want to try some quirky compensation model, we usually will roll our eyes and let the other one go for it. I think like the Warren Buffett, Charlie Munger model works pretty damn well.
And we'll rub our noses in it when it doesn't pan out, like constantly,
Yeah, that makes sense. Thank you.
Daniel, I think you're in a car, but if you can go.
Yes, thank you. I'm parked.
Hopefully not driving. Okay, good.
Nope, I'm parked. So my question is, I own 4 construction businesses, and they're doing well and cash flow positive. And I have bandwidth personally to look at more. I don't necessarily have tons of capital to invest in more. Over years I would. But how do you guys decide or think about when you go to outside investors versus just waiting 4 years to buy the next thing?
I think a lot of that depends on your personality. I just did a podcast with Jason Fried, and he is somebody who he owns 100% of his company, him and his business partner, other than they have like a tiny investment from Jeff Bezos, but like complete control. And he does whatever he wants, and he never does anything he doesn't want to do. So here's an example. I went to him 5 years ago and I said, "Hey, I'm starting this company. I want you to be an advisor. I'm just going to give you for free 3% of the company." And that's like $50,000 or something. And he just went, "I don't like doing legal paperwork. I'm not doing it. But if you ever want any help, text me." Like that's the degree to which he doesn't do things he doesn't want. Someone like him should never have investors, even when completely logical financially, right? I think for us, we're a little bit different. There's been decisions we've made where we've said, you know what, as investors, we are much better off having a smaller piece of a bigger pie and raising outside capital. But it really depends on your personality. So can you tolerate somebody potentially making your life difficult? Who that investor is matters a lot. I mean, I don't know. What do you think?
I just think some of our biggest mistakes have been rushing into something just for the sake of it. I like what Andrew's saying, actually. I would really write out, how does my life get worse? And if you think it's worth how your life gets worse, then I would do it. One way that my life got worse with outside investors is now people can text me and say, call me now, that I have to call. Or before, like when there wasn't, anyone, no one could really text me and say, call me now.
And we didn't
I think
owe
about this a
anything.
lot. I didn't owe anyone anything. Where now I have a duty, right? And I feel that constantly.
Thanks. That's helpful. But yeah, the pressure's been like, I have a deal where there's a fencing company that I could buy, but there's no way I could buy it right now.
Well,
but my life
if
is,
only
I
there
do
is
what I want. I do what I want.
If only there's a wonderful company called Tiny that could finance that with you, with two wonderful, trustworthy individuals who would never bother you. Maybe send us an email.
I'll text you that says "call me now." And just
every day
every
on
hour.
Apple shortcuts.
But I do understand the value of, like, right now, nobody can tell me anything, and so I get that. That's something I got to think through, and that's a good point.
Seriously though, send us an email. We want to get into more businesses like that. So send us an email.
Okay, will do.
Bowen, do you have another question or?
Yeah, just a quick one. And now we have talked a lot about like the building holdcos. And my question is, like, hypothetically, would you guys rather have like one big company, let's say MetaLab, or are you more satisfied with the holdco model? Let's say MetaLab is kind of like an Accenture, like one big company bringing different services. Or would you rather have the holdco model with a lot of different small companies?
I think Accenture specifically, if you think about Accenture, I don't really know that business super well, but I ultimately think it comes down to how many revenue lines you have, right? So I think it's possible that you can have one corp, but if you're General Electric and you're selling jet engines over here and microwaves over here, you're pretty diversified. But if all of your revenue, like let's say Accenture, if all your revenue comes from enterprise contracts with Fortune 500 companies, I think there's risk and cyclicality in that. And so what I love about being diversified and owning so many different businesses is that at any given time, when one is suffering, another is winning, right? And so you've always got that offset. So I personally prefer having a lot of investments and stowing away a lot of root vegetables for the winter.
I actually look at this and I always think Tiny is just a reflection of Andrew and me. And we always have shiny object syndrome. And we are the people who will just always constantly, when we meet interesting opportunities and we think we can get it at a fair price and we're, bullish on the space that it is or it has a margin of safety, I think we're the people who will just always take swings at that. I don't think we've ever actually been the one company, optimize it and rally the troops and do the raw speeches and actually just like grow one big business. We're just not those people. We are the many business people.
Yeah, like we have a lot of respect for Constellation Software, but I don't think that we're more abstract, right? We like to go and discover new things. I think like Mark Leonard has like a formula and he buys one type of business and he's just trying to, they're very diversified across industry, but they really do one thing over and over again. And we're more like Berkshire. We like to get, we could own a vacuum company and an insurance company, and a brick company. We like learning about new businesses and new people and following our passions.
Yeah. Great. Thank you.
Tim, do you want to go next?
Sure. Hi guys.
Oh, Tim, you emailed me today.
Oh, you saw that?
I did. Yeah.
Nice. That was just for fun. Yeah. Just a funky little car.
I think, so Tim sent me a nice car that he saw, used Porsche. And I'm well aware of that Porsche, not that particular one, but those Porsches. And I know that they have the moniker, the Widowmaker. So I avoid any of those. I'm not really a car guy, to be honest. I own one car basically, but I appreciate you sharing.
Gotcha.
This is more the car guy.
It had kind of this like plush aesthetics. And I was like, I wonder if Andrew might like this. It was in Richmond just for fun.
Yeah. But, thanks, dude.
Yeah. Just wondering, two questions kind of, what are both of you guys excited about right now? What's catching your interest? And then do either of you have a lesson learned that you could share that, we might be able to kind of pick something up from, like a recent lesson learned?
So I can go first. So I've got a book coming out in July, and it's the culmination of like 3.5 years of work. And the realization for me is that it's incredibly satisfying to have your hands on the tools and to produce actual physical work. Obviously it's more intellectual work writing a book, but it's very much a reflection of a lot of time and effort. And it's something that will exist in physical form for decades, hopefully, and that people can continue to get value from for a long time. And so I realized, a couple of years ago that being an investor is amazing. I mean, if you think about it in terms of the elegance of abstracting away business and all the stress and problems, it's like Chris and I are not aware of a million problems today, and they're all being solved by other people in delegation. But the downside of that is that you don't ship, you don't craft. And so for me, the lesson there is it's very satisfying to still craft, whether it's, hopefully in a way that benefits your business, like I think the book will, but having a craft or a hobby or something you're doing off the side of your desk is really important if you're an investor.
Is that kind of like the email, your newsletter for you right now?
I'm loving the email newsletter because it's like I recommend all these things to people via text anyway. So now I'm just writing it down, and I'm just loving. I'm an evangelist, right? I just love great products.
I like that. I could address more of the lessons that we've had recently, I suppose. I've had a couple. One is the idea of like how these small yeses I'll do will compound into big pains in the future. Yeah. Do you know like the Buddy Hackett story actually? You'll know it once I start, but like, so there's this story of like, this big city guy decides to go hunting, and he's out hunting and he shoots a duck, and the duck falls in someone's farm. So the big city hunter jumps over the fence, goes over to collect the duck, and the farmer comes out and says, my property, my duck. And they start arguing, right? And then the farmer starts saying like, well, hey, we have a local tradition here to settle disputes. And what we do is we kick each other in the groin until one gives up. And the big city guy, not wanting to be shown up by this local bumpkin, says, all right, sure. So the farmer winds up, kicks him as hard as he can, right in the groin. And the big city guy falls over and he's moaning and groaning and finally says, okay, well, it's my turn. I'll go up and do it. The farmer goes, now to keep the duck. And so it's one of those lessons I keep thinking of, like, you got to make sure the discomfort is worth the fight. And so I look at all these little yeses and how they compound. And I find myself over and over in these situations where I'm doing these big fights and dealing with such discomfort for such little gain. And I'm trying to reframe all of my thinking to make sure what I'm doing is actually impactful. And that I'm just doing one big thing per day, because I don't want to be that big city buffoon out shooting a duck.
Well, the ultimate art is like when someone puts something on. I think both of us have this disease of wanting to please others. And so when people text me and they say, hey, Andrew, I just need some feedback or help with this problem, or hey, can you sort this out, or can you read this, or whatever it is, there's a real art in just saying no and pushing it back down, or saying, let me delegate that to somebody else. And I think Chris and I both will take that backpack of stress on and say, well, now I've got to solve this problem.
Yeah.
And a great example is when someone comes to town. So Chris and I both have pretty busy calendars, and someone will just text us like 2 days before they come to Victoria and be like, hey, guys, I'm coming to town. Like, I'd love to get lunch. And we're like, oh my God, like we're in this small city. We should probably meet them. We feel guilty. But like that gets crammed into our calendar and ruins our day. And yet it's that little yes of guilt. It's a guilt yes,
Yeah.
Like a stressful yes.
Discomfort's often not worth it.
Yeah. Thanks.
You bet.
Thank
you. Christian.
Yeah, I'll be real quick. Obviously, public facing, you have like a criteria of what you look for in companies. I was wondering if you guys had like a shareable like checklist of like, oh, we're looking for companies that are X% in margin, and here's a few other of these things. I'm just trying to get
it's actually on the website. If you scroll down on tiny.com, there's a little bit of a breakdown. But ultimately it's like simple, predictable, free cash flow generative, doing something good in the world. It's hard to compete with in some way, right? They have a niche or they don't have a lot of competition. You know, that it's pretty straightforward, right? Something that it's like you'll know when you see it, a good business. You know, you would know it if you're an entrepreneur. Business on easy mode, not hard mode.
Yeah.
We get a lot of people sending us offers to sell their D2C company with 1% net margins and no positive cash flow. We don't want those. We want like the, you know, monopolistic, boring business that is in a niche where nobody wants to compete with them.
Nick, if you have another question.
Yes, I actually have 3 questions if I can. There 2 of them are real quick. Well, first thing is, Andrew, you mentioned that you had an interview with Jason Fried from Basecamp, and I was wondering if you are gonna.
Oh, we just lost you.
If you, sorry. I was wondering if you're gonna make that available on your podcast. The one with
it's
Jason.
coming out on my podcast
Awesome.
in probably the next 2 weeks.
Awesome. Then I have 2 more questions.
Nick, maybe if we can do one more question and then
sure.
Yeah,
choose your best question and then we'll get back to you if we have time.
Yeah. So I was wondering, maybe because I'm in this feature bubble and I see a lot of SaaS companies, I hear a lot about and probably feel it myself about subscription fatigue. Do you guys also think there is something like that, or it's just that? And so more and more, I mean, some people are suggesting to just go for a one-time payment or once a year payment instead of that, monthly recurring payment, because users are starting to get a bit, feeling fatigue on all the subscription revenue or all the subscription services they're paying for. I was wondering what's your take on that?
No, I personally feel subscription fatigue. Like my wife and I are constantly looking through what we can actually cut. And I keep seeing over and over decisions that are made in the best interest of the business versus for the actual consumer. And there's a lot of products out there that simply are not made better by being a monthly subscription. You can actually probably talk about this with Jason Fried and what he's doing, because it's actually quite topical.
Yeah. So Jason is doing once.com, and he's basically said Slack is bullshit. It shouldn't cost $20,000. It's a simple piece of software. And why don't you just buy it once, pay us annually for updates like software used to be, and you run it on your own server. So I admire a lot what he's doing. I think ultimately it comes down to the commoditization of these things, though. Yeah. So, the fact that you can move off Slack so easily to a product that costs you $200 says a lot. And so I think if you're in a niche, let's say that you're building golf course management software and there's 2 competitors, and ultimately if a golf course chooses you, they're going to stick with you for 20 years. Yeah, I think you can get away with having a ridiculously high subscription fee, and you can pay a lot for that customer and you don't have to worry about it. But if it's a commodity product like chat and there's no network effect where, with Slack, for example, we thought about this with MetaLab. MetaLab pays a lot of money for Slack, but they use it with clients because clients are standardized on it. So if they move to once.com, that's negative. But maybe one of our software companies that uses Slack, I mean, we could easily move them to once.com. Yeah. So it just depends. How much of a moat does it have? Does it have a network effect, or does it have a niche with high switching cost?
Rakesh, we can do maybe Rakesh, Steven, and there's just one more question.
Yeah, why don't we do 2? We can do 2 more questions.
Yeah, and then Ethan has a question that on the chat. I don't know if you can read the chat.
Sure.
Yeah. Hey, I'm not driving a Tesla anymore. So
you have
my
like all this
is,
cool. What's all this cool stuff on the whiteboard behind you?
Yeah, scribblings mostly.
these
are companies.
It's your manifesto.
Yeah. Brainstorming.
Looks like a pipe bomb in the background. No, I'm just kidding.
Oh shit. No, my question though is, what are the key metrics that you guys look at? And if there isn't like one set of those for all of the companies, then what are the most common, metrics that you're talking about? You mentioned free cash flow in in terms of like something you look at when you bring companies in, when you're evaluating businesses. But, what is that when you guys are talking amongst each other about, the health of companies, what are the things that come up over and over again that are like your touchstones of financial performance?
Well, I think Charlie Munger has this great line. He says, every time you see the word EBITDA, replace it with bullshit earnings. I think it's easy to fool yourself when you look at EBITDA. Don't get me wrong. I think it's a valuable metric to understand and track, but we really like to look at cash flow. So Chris and I started in an agency where cash flow was all that mattered. We could see net income reported of $200,000, but if the invoices weren't paid on time and our AP didn't go out at the right day, we were effed. We didn't make any money. And so ultimately what we're looking at is usually operating free cash flow and then ultimate free cash flow out of the business. If you have debt, I think operating cash flow is a better thing to look at to really say, operationally, how is this business producing cash and how are we looking? But yeah, those are the things we're really, really looking at. And then the helpful ones, we do look at EBITDA, we do look at net income, but usually we're more focused on the cash flow side.
Yeah. And is there a ratio on cash flow to revenue that makes cash flow more attractive or less?
It varies so much depending on what the business is, right? Because we own such varied businesses, from job boards to agencies to social networks to marketplaces to a coffee business. We can't to do a click and drag across all these fundamentally different businesses. I think would destroy those businesses. Like, we just can't compare. What's true for AeroPress to be successful isn't true for the job board business.
What right? I think would be true would be you would love. It's great to have a business where your net income actually reflects your cash flow, right? So one of the blessings we had with MetaLab, for example, was if we reported that we had done $1 million of net income, we would probably make about we'd have about 750K of cash after we pay the taxes. And that was quite predictable. Whereas in other businesses, even in AeroPress, for example, let's say that we reported $10 million of net income. Well, we might have taken 3 of them and invested in a new product line. And in that business, a new product line actually costs real money, inventory, all the other stuff. So I think it totally depends on the business to understand what is reasonable and what fair capital expenditure and reinvestment is.
I'd say what we talk about more than anything is actually, just between us, is often what is the incentive at play. And it's staggering how often a poor incentive structure ends up causing more harm, right? And the adage, what gets measured gets managed, even if it's to the detriment and such. I see that a lot, where we often will get harmed by an incentive. And you see it a lot with advice, right? Where there's misaligned advice with the incentive. And I see it often when we have an operating group and, at no fault of their own, they're incentivized for a certain set of behaviors. And often it's not even just cash flow. Sometimes it's, ease of life or not getting questions these unintended consequences creep up constantly. We spend more time talking about that.
Incentives is 90% of what we do.
Yeah. I always think, who nailed incentives is the Romans, right? Because when a bridge would get built, they would make the bridge builders live and stand underneath the bridge for the first several months.
So awesome.
And it creates redundancy. More than anything, that will create redundancies.
I love that. Okay, one more question. Do we have one more, Monica, you said?
Andrew, there's a question in the chat that I can read if you...
Yeah, you want to read it?
Yeah.
Yeah, sorry, we can't see it.
Yeah, I worked in PE/VC fundraising for several years and have significant experience building pitch decks for PE and VC funds to raise capital from family offices, institutional LPs. I'm thinking about going out on my own and providing those deck creation design services directly to funds and companies raising venture. What's the best way to reach potential clients? Just cold outreach, or are there any other channels that you recommend?
I love that. I think that's a really great idea. I think PE and venture pitch decks. Pitch decks are pretty damn good, but PE pitch decks are just a fucking nightmare. They're so confusing, and the graphs and charts and addendums and stuff. So I think that's awesome. I think you should email us. We're always trying to come up with better ways to communicate with our investors, and we have a lot of people that would be interested. We actually have our own internal investment bank called Tenzing. So you should email me, Andrew@tiny.com, and I can connect you with them. But that sounds cool. I like that idea. It's a good niche. I think if it was anything else, I would say don't do it. It's not high value enough. Like, you're only going to get paid $300 to do a deck. But I think when you're working on like a $20 million deal, they'll be okay to pay you quite well to do a nice deck. Great, guys. That was really, really fun. It was nice to have Chris here. Oh, and thanks for joining us, guys. We'll see you next month.
Thank you.
Bye-bye.
Thank you. Bye-bye.
Thank you. Thanks.